Good day, ma'am. So, I am Madeline Ray P. Idoy, and I am going to prepare the journal entries under perpetual system and periodic system using the exercise 8 problem.
Our entry for that day, the first system is called periodic debit, purchases, and credit accounts payable. Our transactions during the month of June, we use the account purchases because in the periodic system, there is no inventory account used for purchases. Instead, all merchandise bought for sale is temporarily recorded in the purchases accounts. So, we credit accounts payable because hindi pa man natin ito nabayaran. So, asan natin nakuha yung 600,000? So, we times 100,000 for tires times 600 for the cost of per tire. So, it equals to 600,000. So, that is our first entry. The second entry is in June 4, we paid tracking firm 8,000 to ship the tires purchased on June 2. So our entry for that day is freight in 8,000 with debit freight in and credit cash. Why freight in? It's because freight in is recorded in a separate account called freight in, which is added to net purchase at the end of the period. So a freight in is a transportation cost, and we paid naman the freight in, so we credit cash for 8,000. That is our entry for June 4. The next is in June 5. Purchase 600 tires at the cost of 600 per tire. Terms of payment is 2% discount if paid within 10 days, and the full amount will be due within 13 days. So our entry for that is the same as the entry of June 2. So we debit purchases 360,000 and accounts payable 360,000. So how do we come up with 360,000? So we multiply 600 times 600 tires at the cost of 600 per tire, so 600 times 600. So we come up with 360,000. So that is our entry for June 5. So in June 7, or June 6 rather, paid tracking firm 5,000 to ship the tires purchased on June 5. So our entry is the same as June 4. Freight in, we debit freight in 5,000 and credit cash for 5,000. It's because we paid for the transportation cost. The next entry would be on June 7. Returned 150 of the tires purchased on June 2 because they were defective. Received a credit on open account from the seller. So on June 7, our entry for that is we debit accounts payable and credit purchase returns and allowances. Why? It's because it decreases our accounts payable while it increases purchase returns and allowances. Why does we use that account? It's because the return is recorded on that account. It is a contra purchases account used to reduce total purchases later. So we come up with the 90,000. It's because we multiply the return tires, which is 150, to the cost of each tire, which is 600. So that's why we come up with 90,000. So the next entry would be on June 11. Paid for tires purchased on June 2. So here's our entry. We debit accounts payable to 510,000 and credit purchase discounts to 5,100 and cash for 504,900. Our accounts payable is only 510. It's because in June 7 we decreases our accounts payable by 90,000, which is originally 600,000. So 600,000 minus 90 is equals to 510,000. So how do we come up with purchase discount? So 510,000 and we multiply it by 1%. So that's why we come up with 5,100. And the remaining for 510,000 minus 5,100 is what we paid for that day, which is 504,900. So our next entry would be on June 13. Sold 700 tires from those purchased on June 2. Selling price was 900 pesos per tire. Terms 1% discount if paid within 10 days, and the full amount will be due on 30 days. So here's our entry for that period. We debit accounts receivable 630,000 and we credit sales 630,000. We debit AR, it's because the cash is yet to be received, or the cash is to be received. So we credit sales because cost of goods sales is not yet recorded. It will be determined at the end of the period after a physical count. So how do we get the figure of 630,000? By simply multiplying the 700 tires that had been sold times its selling price. 900,000 is equivalent to 630,000. So the next entry would be on June 22. Received cash from sale of tires on June 13. So this is our entry on June 22. So cash, we debit cash 623,700, sales discount 6,300, accounts receivable is 630,000. We debit or we credit AR. So how do we get the sales discounts? By simply multiplying 630,000 multiply 0.01 or 1%. So it equivalents to 6,300 minus, or we deduct the 630. So that's why we come up with 630,700. That is for our cash and accounts receivable for 630. So the last entry is on June 30. Paid for tires purchased on June 5. So here's our entry. Accounts payable 360,000 and cash 360,000. So yeah, we paid for our purchase in this entry, so 5. So normal entry, so accounts payable, we debit accounts payable and credit cash. And that's it for our periodic inventory system. The next one is called perpetual inventory system. So it's the same problem. So our first entry for June 2 is we debit inventory for 600,000 and accounts payable for 600,000. As you can see, it is different from periodic inventory system. It's because in the perpetual system, all merchandise bought goes directly into the inventory account, since inventory records are continuously updated. This means inventory quantity and value are always current. So that's why we're going to use inventory account instead of purchases. So again, we get the figures by multiplying 1,000 tires to 600 pesos per tire. That's why we get 600,000. So our entry for June 4 is this. Inventory, we debit inventory for 8,000 and cash for 8,000. As you can see, in periodic, this is freight in, while here in perpetual, it is inventory. It's because freight cost is added to inventory cost immediately, since perpetual keeps running totals of actual inventory cost. So in periodic, freight cost recorded separately in freight in, while in perpetual, freight cost is capitalized to inventory. That's why we debit inventory and we credit cash for 8,000. While in June 5, here's our entry. Inventory, we debit inventory for 360,000 and accounts payable for 360,000. Again, it's the same entry for June 2. So we come up with this figure, 360,000, by multiplying 600 tires at the cost of 600, or at the price of 600. So that's why we come up with 360,000. In June 6, so here's our entry. Paid tracking firm 5,000 to ship the tires purchased on June 5. So it's the same entry to what we did in June 4. Instead of write in perpetual, we use inventory account. So we debit inventory to 5,000 and cash to 5, and we credit cash to 5,000. Our entry for June 7 is this. We debit accounts payable to 90,000 and credit inventory 90,000. It's because under perpetual, the cost of returned goods is removed directly from inventory. So instead of using other accounts, we use or we debit or we decreases its inventory. So accounts payable, we credit accounts payable 90,000, and inventory, we credit it by 90,000. So our entry for June 11 is paid for tires purchased on June 2. So here's our entry. We debit accounts payable by 510,000, inventory 5,100, we credit cash and inventory, so 504,900. As you noticed, in periodic system, it is called a discount sale, or discount. While here in perpetual,
perpetual system, discount is deducted directly from inventory since the cost of goods actually paid becomes lower. Perpetual keeps inventory at its net cost. So yeah, the deduction will be directly to inventory. That's why we credit inventory for 5,100 and we credit cash for 4,900 since we already pay our purchases that was recorded on June 2. So the next entry would be our entry for June 30, which we have two entries. So the first entry would be accounts receivable. We debit AR 630,000 and we credit sales 630,000, just like what we did on periodic system. Well, here's the catch. There's a second entry which is the COGS. We debit COGS for 420,000 and inventory for 420,000. Why? It's because perpetual system records both the sale and the cost immediately. Keeps track of ending inventory continuously. So in perpetual, we records COGS and reduces inventory immediately. So that's why the next entry would be on June 22. So here's our entry for June 22. Receive cash from sale on TARS on June 13. So we debit cash for 623,700 and we credit also a sales discount 6,300. We debit cash and sales discount and we credit accounts receivable. So yeah, it's the same as what we did to periodic system. So the last entry would be June 30. So here's our entry for June 30. As you can see, there is no difference between the entry of periodic system and perpetual system. It debits accounts payable and credits cash for 360. So no discount taken, so full payment is recorded. So yeah, and that is how we record perpetual inventory system.